What's up, everyone? It's Ben here, and today we're going to talk about something super exciting to some people, which is the balance sheet. And let's go into today's agenda, which is going to be pretty simple. First off is what is the balance sheet? We'll go through some definitions and key rules. Then we'll go into assets, liabilities, and equity, the key components and parts of the balance sheet. And then we're going to actually jump into Excel and create a balance sheet ourselves. And this PowerPoint and the Excel is all going to be available for free down in my description and pinned comment. So feel free to download that and follow along. And I do also want to mention that as we go through each section, the beginning ones, there's going to be terms that you may not understand if this is your first time going through everything, but we're going to go through examples and everything will build on top of one another. So if I do go a little bit fast in the beginning, just be aware I'm going to reinforce what we learned in the earlier parts later on in the video. So first of all, what is the balance sheet? Take a really large step back, look at everything big picture. The balance sheet is one of three core financial statements, and I'm going to be making videos about the income statement and cash flow statement similar to what I'm doing right now with the balance sheet in the following 1 to 2 weeks. But these three are what you want to look at to understand the financial health of a company. So balance sheet can be defined as a financial statement that reports a company's assets, liabilities, and shareholders' equity at a specific point in time. And I want to highlight on the specific point in time part. So you can think of a balance sheet similar to if you were to look at your checking account or a credit card account. If you were to check it yesterday, then you would have a very specific number as to how much is in your bank account for your checking account and then what you owe in your credit card, right? And that's very similar with the balance sheet. You're only going to be looking at it at a very specific point in time, which is different from, let's say, the income statement, which is where you're looking at figures over a period of time. So going into some of the key parts of any balance sheet. First of all, assets are resources a company owns that are used to generate profits. So you can think of it as basically what companies own. Then liabilities are cash a company owes to other parties. Shareholders' equity is capital attributable to company owners. And one way to think about how all of these three things fit together is that liabilities and shareholders' equity fund assets. And I promise you by the end of this video, you'll really understand what all this means. But another kind of simpler way to understand the balance sheet is that it describes what a company owns, what it owes, and how it was funded. There is another kind of way to think about the balance sheet, a golden rule that I think is an easy way to kind of understand how the balance sheet works, which is ALE. And you might have already guessed that A stands for assets, L and E stands for liabilities and equity. And assets must always equal liabilities plus equity. And that's why it's called the balance sheet, because these things must balance at all times. Again, when we go through the example ourselves, I think this will become a lot more crystal clear. Before I move on to each key component and section, though, I did want to tell you guys about today's sponsor for the video, which is moomoo. And you can actually get up to 13 free stocks. There's an offer that ends September 15, 2022. I will go over that in just a minute. But before that, I wanted to show you guys the actual app itself a little bit. So if we look at Apple, what I really like about moomoo is that there's a ton of data that's available here that you can't find anywhere else. So like if you go into the financial tab, you can see a bunch of different metrics and financial indicators, even the financial statements, even the balance sheet here, which if we click on it and give it some time to load a little bit, you can actually see the figures from the balance sheet, which I'm not really aware of any other app that goes into this much detail. So another example is if you go into summary, you can go into something like shareholder holdings. You can see who owns the stock and what changes have been happening with shareholder holdings over the past let's say quarter or so. So a lot you can really do with this app. And another thing that's really great about it is that they offer 24-hour support. So you can call them, chat with them, email them. And I think that's just super important for any trading app these days. And going into their offer, you can get up to 13 free stocks. So if you open up an account using my link in the description, you get 1 free stock, deposit $100. Then for a limited time, you can get, does this look like 1, 3, 5, so 9 more stocks. And then if you deposit 2,000, you can get 3 free stocks. And so this offer ends on September 15th. Feel free to use my link, check them out if you're interested. And with that said, let's move on to the next section of the video, which are going into the key components of a balance sheet: assets, liabilities, and equity. So assets can be broken down into current and non-current assets, and that's what we'll see in actual live balance sheets as well. It's always broken down into those two things, or those two categories. And as a friendly reminder, assets are resources a company owns that are used to generate profits. So let's take a look at some examples. So for current assets, these are categorized based on assets where you can liquidate them in 1 year or less, while non-current assets usually will take more than 1 year. So for example, cash and cash equivalents. If you have $500 in the bank as a business, you can use that however quickly you want to or slowly, but it's very, very easy to liquidate it, right? So it's 1 year or less. Marketable securities, this is something you're going to also see a lot on balance sheets. And this is just securities that you can, that this can be various things, but they could be something like bonds, marketable, right? Securities. And there's something that you can just easily sell and convert into cash. Accounts receivable is when you have delivered a good or service but not yet received the money, but you will receive that cash pretty soon. Usually it will be less than a year. Inventory, I think pretty self-explanatory. Prepaid expenses are expenses that you already paid in advance. So if you pay for rent a year in advance, then that's a current asset. So next, if we go into non-current assets, these include things like long-term investments, plant, property, and equipment, which are things like office buildings or equipment like desks, chairs, anything like that. Intangible assets, which could be things like trademarks and goodwill, which I won't go through over in this video. But essentially, you can think whenever you're looking at a balance sheet or any financial statement, there's likely going to be terms that you don't understand. And the best thing to do is just Google it and see how it works, how it fits into the balance sheet. And you'll kind of see what I mean when we go through the Excel example. So liabilities are very similar to assets in that they can also be broken down into current and non-current liabilities. And this, again, is cash a company will eventually have to pay to other parties. So current liabilities, also 1 year or less. Non-current liabilities, more than 1 year. And examples of current liabilities include things like current portion of long-term debt, accounts payable, which is similar to accounts receivable, but instead it's when you already receive something and need to pay a supplier. Then there is interest and taxes payable. So interest, this refers to loans, and taxes I think are pretty self-explanatory, but this is amounts that you need to pay that you haven't yet. And then there's something called deferred revenue, a little bit more complicated, which I won't go into, but feel free to Google that. And then in non-current liabilities, there's long-term debt, deferred tax liabilities, pension fund liabilities. Again, I just wanted to show you guys some of the very common terms you'll see in a lot of different balance sheets. And then let's go into shareholders' equity, which is known as the book value of equity. And you can think of this as the capital attributable to company owners. So common line items include retained earnings, which is your prior retained earnings plus your net income minus dividends. Treasury stock, which is stock bought back by the company at some point. Preferred stock is a separate class of equity for special investors. And usually they have, whenever a company, let's say, goes bankrupt, then preferred stock will be paid before common stockholders. And then preferred stock holders usually get paid dividends. And then there's common stock, which is a class of equity representing ownership in a company. We'll see in the Excel example how that works. And then additional paid-in capital is the amount invested in excess of common stock. So those are the three core components of the balance sheet. And I know I just breezed through that pretty quickly, but I do hope that when we go through the Excel, which I'm about to right now, it's going to be, all of this is going to make a lot of sense. And if anything was confusing, maybe it'd be good to like rewatch the video from the beginning. And then if after doing this exercise, everything will make sense. So the exercise we're going to do is we're going to have 3 different kind of events that happen when you're starting a lemonade stand, which we're going to call Lemonade Co. And let me zoom in just a little bit more actually, so you guys can see everything. So the first thing that's going to happen is that on the 1st of 2022, you start a lemonade stand with $1,000 in capital, $500 through debt, let's say through your parents, and then $500 cash from your own pocket. So what happens to each of the different parts of the balance sheet? So I actually preloaded this a little bit, but as you could probably guess, we start with $1,000 in capital, right? So your assets, your cash increases by $1,000. And then for your liabilities, your debt increases by $500, which we discussed right here, your loan from your parents. And then this is where the common stock comes into play. So you invested 500 cash from your own pocket, right? So that goes into common stock. So how does this look on the balance sheet? In the yellow here is where, if you're following along, you would enter your figures. So cash increased by $500, or sorry, $1,000. Then for your loan, that increased by $500. You can see it as a non-current liability, or it could be a current liability if it's a shorter term loan. And then shareholders' equity or common stock increased by $500. And what I want to highlight here is that you can see I have like this check at the bottom. And what this is just really doing is checking that your total assets equal your total liabilities and shareholders' equity. So the next thing that happens in 2 weeks is you buy $500 worth of lemons, sugar, and water, which is inventory. And you pay for that with $250 in cash and $250 in credit. So basically accounts payable. And then you invest $200 into a nice wooden stand, which is equipment. So that will be your plant, property, and equipment. So let's think about what happens here. So your cash decreases by $450. And the way we get to that is you pay $250 worth of cash here for your inventory, and then $200 for your wooden stand. So that's $450 decrease in cash. Your inventory increases by $500 because you bought $500 worth of lemons, sugar, and water. And then your plant, property, and equipment increases by $200 here because you bought your wooden stand, right? So let's see what happens here. If we have to also go into liabilities. Accounts payable, as discussed, bought on credit, so increases by $250. Shareholders' equity, no changes. So cash decreases by $450. Inventory increases by $500. Plant, property, and equipment increases by $200. And we can see that our total assets have changed by $250, right? Which is exactly what we need to add into here as well. Your accounts payable increased by $250. So you can see that after making all these changes, your balance sheet balances. So we know that we're correct so far. So after all these changes, our next step is to see what our balance sheet looks like. So what we're going to do is go from our previous balance sheet and add up all the changes. And you can see that when we do that, our assets equal our liabilities and shareholders' equity. So we know that everything's correct. And so let's look at what happens at the end of the month. So after 2 weeks, you sell out your inventory and you profit $500. So what happens to your balance sheet? So your cash increases by $1,000. And the reason for that, normally it's never this simple, but we're just assuming that everything is a cash business. So if you sold out your inventory and you profited $500, then you have to, by definition in this example, have received $1,000 in cash, because you sell out your inventory, which costs $500. You profited $500, add those together, that's $1,000 in cash that you'll have in your, let's say, cash register for your lemonade stand. But your inventory has decreased by $500 because you sold out all your lemonade, right? Then for your liability section, there are no changes. And shareholders' equity, this increases by $500 because if you remember the formula, it's your previous year's retained earnings plus net income minus your dividends paid. So let's see what happens to your balance sheet. Your cash increases by $1,000. Your inventory decreases by $500. And then your retained earnings increases by $500, right? And again, you can see that everything balances, so we know we're correct here. And then what we simply need to do for our balance sheet for January 31st, 2022 is just add everything together here for our previous balance sheet plus our changes. And you can see, again, everything balances out. And so hopefully this was a helpful exercise. If this is your first time going through this kind of stuff, I know it kind of might have gone past your head a little bit, but that might be a good segue actually into some concluding thoughts. So first of all, the balance sheet provides an overview of what a company owns and owes at a specific point in time. Second, don't forget the golden rule, which is assets equal liabilities plus equity, which is just simply memorable as ALE. And then lastly, this is a point I really wanted to get to. Understanding a balance sheet or any financial statement takes a lot of time. And the best way to learn is really just to study each different line item one by one and see how they affect the balance sheet, similar to what we just did in the Excel. And so, uh, obviously you can't remember everything that I taught you today if this is your first time, but if there's ever a line item you don't understand, just Google it and then do this kind of exercise on your own like we just did for Excel, and it'll be very helpful for your balance sheet. So quick reminders. One, the Excel and PowerPoint can be downloaded for free down in the description. Second, I do have a investment banking recruiting course that I'm creating, and I'm giving huge discounts for people who sign up early. Feel free to sign up for that if you're interested down in my description. And lastly, check out moomoo for up to 13 free stocks. The offer ends September 15th, also down in my description below. And with that said, I hope this was helpful. Income statement and cash flow statement videos will be coming up in the coming weeks as well. That said, thank you all so much for watching. Hope to catch you in the next video. Thanks so much all, and peace out.